Today we're breaking down an industrial property our team recently sold for just over $32.5 million. In this video, we provide the what, how, and why. What are the details of the deal? How did our team source and structure the deal? And why do we think the deal is an important data point for the market? This industrial property is approximately 29 acres and sold for just over $32.67 million. It's fully leased by a single tenant, and our team sourced the acquisition off-market for the buyer. The profile of the seller is a scenario that we often see. Private individual or collection of partners started a business 3 or 4 decades ago and purchased the site for their business. Eventually, they sold the business but retained ownership of the real estate, leasing the property back to the buyer of the business. And more often than not, because of the real estate ownership's previous connectivity to the business, new leases and extension options are negotiated that tend to be at well under market rents, with options to renew capped based on fixed increases to the rent or based on CPI. And that was the case here. The existing single tenant had term left on their lease at a significantly low rate, plus multiple fixed options to extend. So our team had a monumental task to match the right buyer with this unique opportunity. Huge development site encumbered by a long-term lease. With over a decade left on the lease, counting options to extend, all of which were at rental rates significantly under market, our team had to match this property with a buyer that had the flexibility to combine patience with the ability to absorb a lower cap rate and return until the lease expired. But the reward for that patience was a land basis and acquisition price per square foot close to 100% below market. With all those challenges and future upside in mind, our client, IDS Real Estate Group, was an ideal buyer. Not only did Matt Amahoff and Nurses Apashan have the foresight and creativity to see the value in this deal and get it closed in 60 days start to finish, but they had just purchased a property up the street with an identical profile, so we knew they could perform, despite the complexity of the lease. Why is this deal an important data point for the market? Opportunities to acquire industrial development sites in the Inland Empire of Southern California are extremely scarce. And as a result, institutional investors, developers, and their capital partners are forced to be creative when assessing acquisitions. This deal is a great case study of a large-scale development site fully encumbered by a single tenant lease for a period of time way longer than the maximum hold period an investor typically is willing to wait before breaking ground. And because of that in-place lease, the buyer was able to acquire the property for a land basis at approximately half of the market comparable price. And that patience will pay off when the buyer eventually breaks ground on a 600,000 square foot distribution center. If you're an investor looking to acquire industrial property or development sites just like this, or an owner of industrial property looking to maximize your exit value, please contact our team.